Good afternoon, everyone, and welcome to the Daily Volatility Box Report for November 27th, 2019. We are TOSindicators.com, home of the Volatility Box. In today's video, we'll spend some time looking at just the tickers that set up for us off of our stock Volatility Box scans. And so we'll just look at two tickers, or two scans in particular, rather. We've talked about both of these in previous videos. One is our 2 ATR move, which is right down here, and then one is our 5.75% move, which really is just measuring if the stock moves 5.75% from the open with a few other conditions mixed in. Right, so fairly straightforward, simple scans, and let's just go straight down the line to see what sort of entries we had populate across the list for our scan tickers, right? And so we have the aggressive volatility box plotted here. You can ignore these labels. They're for our futures volatility box. But here you can see volatility box daily aggressive, right? And this is the label that tells us which stock volatility box we're currently on. And so going down the list in ENPH, no trade. Same thing in blue. However, something interesting we see in blue is it made exactly the distance that we thought or expected rather blue to be making over the course of today. Let's keep going down. Next is HP. Once again, HP breached what would have been our target line if we did in fact trigger a short entry, which we did not. However, you can see how this information can start to be really powerful even if you're not looking to fade, right? If you were looking to actually enter any of these tickers, just stay on a bullish note, bearish note, whatever it is, off of another scan, another system, your normal swing trading system, whatever it is, this really gives you some powerful information to help you figure out when trends start to exhaust, when you can start to look at fades in these trends, and then some conservative targets, which is really our entry trade, right? Which is you enter here, and then we're looking for a target versus something that we've seen happen a few different times, which may actually come up in some examples today, where we have our entry and then a really nice sharp reversal down lower, which is really what we're looking for, right? That's the place where we get the best risk to reward ratios, and we make sure that the probabilities are stacked in our favor. So now going down the list, we see Autodesk had earnings, and so we switch to the conservative volatility box there. And so if we load that in, we'll get rid of the aggressive just for the time being. And now let's take a look at Autodesk. Okay, so in Autodesk, same, a very similar sort of thing, right? Here we see once again, we made that move straight to what would be our first level of price exhaustion, and that's where price then started to dwindle out until we retested that level once again, and we see again into the close, we sort of stagnated out there, right? We weren't even able to make it to what would have been our normal fade entry, which tells you that this target line does represent an area, the first level in which price starts to exhaust. And I think a few of you have started to notice that this gray line does also represent some sort of information that we can use. For us, we tend to look at it as targets for our fade trades, but that really is that first level of exhaustion that we could be looking at. Now let's go back down the line, AXSM. And here we didn't have any earnings, and so let's go back to our aggressive volatility box. Right, and we see the exact scenario that I think I described just a few minutes ago, which is price slams into our aggressive volatility box entry lines. Our entry is right here at the beginning of the cloud, and if we zoom out to see what actually happened, right off of our entry, picture perfect entry short price for the day, actually almost a high, a few cents off of it. And then we had a really nice follow through. We hit our T1, that first level that we were just talking about, fairly instantly. And then we then continue to make a move down lower where you could have started to trail down your stops, maybe above this consolidation period right here, maybe at break even. It's really whatever fits your trading style. But I think you can see where the power of these models come in, where you had this really nice reversal move. Another thing that I'll also point out, which another member also has started to notice, Roy, if you're listening, this is a shout out to you, is the idea of price making the actual move that we're looking at over the course of the time that we think it will make that move, and what that suggests for the next day, which in this case, and we've talked about this for all of our members who've watched that 42-minute video on the stock volatility box, it's the idea that price has made the move that we expected it to. It's a nice, healthy uptrend. Now, this is where price has sort of said, hey, we're going to camp out here for the night. The next day, once again, starts hiking back up higher, and we can see exactly what happened. And then we actually slam into what is our area of price exhaustion, where we do in fact get that fade that we're looking for, right? And this happens in the time frame that we're also looking for it to happen, where you have enough time for the follow through to actually take place. Whereas in this case, we made this move over the course of the entire day. And I think that's the difference between these two moves, but that's also the difference in how you can use the information to trade based on if you're looking for, say, a trending candidate, or if you prefer fades, where you're then waiting for opportunities like these. And finally, let's take a look at GUSH, right? And so if we take a look at GUSH, starting at the history, which is, we're on a 5-minute, 5-day chart, we see on the first day, GUSH absolutely didn't respect even our conservative models. Second day, same thing. Third day, same thing. Now, if we keep scrolling through, fourth day, same thing, right? We've blown past. Fifth day, same thing. And now if I think this should bring us to today's activity, we see for the first time GUSH has actually started to respect our conservative volatility box. Now, I don't think this is any measure to really give you a vote of confidence in taking the trade in GUSH particularly, but I think this is where you can start to see how you can take a look at the previous history and see whether or not GUSH has respected our conservative models, or if it's exhibiting greater than usual volatility, right? And I think it's very, very easy to tell here that GUSH is experiencing greater than usual volatility, which gives you that heads up sign to stay out of this market altogether. Or if you're looking to trade it, then you're looking on layering on something like those dynamic RSI candles to add a little bit more confidence in the trade, right? And if we just bring this back here, we were talking about the 3-minute chart. Every time we use these colored candles, we can see that switch did in fact sort of take place. Again, this is, in my opinion, not really a trade that anyone would really consider taking, considering that the trade has not worked out all 5 days using these models on the GUSH ticker, which really is information in itself, right? That GUSH is experiencing greater than usual volatility. I don't need IV rank. I don't need anything else to really be able to measure that. This is simple in itself, and we can see if we just zoom out, something else that's sort of interesting, which is as soon as we broke through our aggressive volatility box, or our conservative volatility box clouds rather, which is usually our sign that price is breaking up in that direction, we had really a nice bullish move up higher, and then a reversal ultimately until we are now coming back into what I would consider to be chop. And so I hope tonight's video gives you some sort of ideas of how you can use not only our scans, but some of your own scans as well, along with our aggressive volatility box to find entries like AXSM, which set up almost perfectly for you and give you some really nice trade entries. And ahead of Thanksgiving, our team would like to convey just a sense of gratitude to all of you who have participated in our community, who have emailed us, who've interacted, who've shared code, who've watched our videos, who've given us support either publicly or privately. We appreciate it. We appreciate you. And really, we're just thankful for having you all be a part of this community and help us collaborate and really work together to beat the markets. Hope you all have a wonderful Thanksgiving, and we'll see you after the Thanksgiving break.